Hi friends, Simit here from informedtrades.com. In this video I want to talk a little bit more about my technical analysis method, how I use technical analysis to place trades and manage trading positions. The first thing I want to note before I actually get into the technical analysis that I use is that technicals for me are subordinate to fundamentals and trading psychology. So for me, when I'm we're in the process of trading, the first thing I want to look at is macroeconomics. Try to get an idea of capital flows and what multi-year bull markets we're going to be in, where are the fundamentals going to be taking us, where are the fundamentals going to yield the strongest trending markets. Once I identify which markets are trending the most, I can then use technical analysis to manage risk and optimize performance within that transition, within that trade. Also, trading psychology is very important. The methods that I use are actually very simple. It's not complicated at all, but it does require trading psychology. It does require patience, discipline, being able to cut your losses short, that type of thing. Okay, so there are basically three elements of my technical analysis, which are support and resistance levels, trend lines, and candlestick patterns. The first is support and resistance. Support and resistance is basically a horizontal level on a price chart that has been touched at least 3 times, and the market is bouncing off that level. So you can think of it as a floor. If the market touches off of it, bounces off and goes up, then it's like a support level, a price floor. If the market goes up against it and bounces down, then it's a resistance level, a price ceiling, price roof. So identifying these levels, support and resistance levels, can tell us where the market may be reversing, and that gives us a low risk opportunity to place a trade. The second tool I like to use is trend lines. Trend lines, as you can see in the chart on the screen now, is just a diagonal line. It's the same type of idea as support and resistance. Instead of support and resistance is horizontal, trend line is diagonal. Same idea. Once the trend line's touched 3 times, I think it's a valid point, a valid line, and if the market touches again in the future, it could bounce off it. You see on the screen now is a chart. That trend line's been touched 3 times. And the market's bounced off it pretty strongly each time. So if we continue drawing that line and the market touches it again, I think there's an opportunity to anticipate a reversal. With all these things, we're anticipating reversals where buyers and sellers are going to step in to reverse the direction of the price. It's also a low risk opportunity because we can use a stop loss, and if the market doesn't reverse, then our risk is contained. So it's these points, these reversal points are low risk opportunities in a way. The third key technical tool I use are candlestick patterns, specifically long wick candlestick patterns. So candles that have a really long wick, where the wick is 2 or 3 times as long as the body. The longer the wick, the more significant the candle is, in my opinion. If you look on the screen now, there's 1, 2, 3, 4 long wicks that we see, and you can see the market's reversed each time in another direction. So something that can be done is once you see a long wick, you can place a trade. You can put your stop loss just outside that long wick, 5, 10 pips away or something like that, maybe a little bit more depending on your risk tolerance and any other factors you may see in the chart, and that can be a trading opportunity. Now, once you're in the trade, again, my method is I want to capture the whole trend. This method is designed to capture big trends. So we trail the stop. So you see on that trend line now, once a horizontal support resistance level forms, I like to move my stop down accordingly. This method will not be 100% successful. There are going to be errors. There are going to be losses that occur. It's very important to know that going in. This is where psychology is hugely important. Once you're willing to accept losses, or you're going to have some losing trades, that means each trade you place cannot be a huge trade. You cannot lose 50% of your account on a single trade. So risk management is very important. That's about it. If you want to discuss this video with us or check out the full article that goes along with this video, join us over at informedtrades.com. Thanks, and best of luck in your trading.